Okay, boys and girls, going to be doing a scruff. As you can see, I'm not at home. I'm actually in the hotel. Pool and what have you is behind me. So I haven't got my computer to show you the question, but I'll give you the gist of it. But first of all, cheers.
What am I there you are?
Just brought me coffee.
And the biscuit?
Biscuit. What are you off?
Say what my myself?
Well, there's a lot of things I like, but you don't offer that up very much either. Shaz on the holiday, boys and girls. Right. Sorry about that. It's a question for Lewis. Little salute to you, kid. Let me just put me sugar in me coffee because I need it. And why? Because we all know Scruffy likes coffee. And it's a question, if you go through the videos, is quite a common theme. Now, the gist of the question is, since coming into the group, smashing it, all right? Doing incredibly well. No losing weeks, and even had a 15-day streak of non-losing, which is excellent. But we all hit losing streaks. My longest streak is 187 days. Right through. No losing days. But when you get caught, it then becomes a promo. And that's essentially what the question is. So, smashing it, doing really well, then had a catastrophic loss. But not only a catastrophic loss, a one that dents you internal, your mindset. But then tried to claw it back, got a little bit, but then got smacked again, and one thing another. And the question was, how do you deal with such a setback? Well, something I always say is, when it comes to trading, it's not the system, it's the trader. The problem is not what you're looking at, it's you. Because when you have a superb winning streak like what Lewis is talking about, and I know this because I've been in it, you become arrogant. You think, this is it, I have cracked it. And you up your position size, you overtrade, you do also. And then inevitably the wheels fall off the bus. Now this puts you into what's called the treadmill of terror. And the treadmill of terror is repeating the same thing, expecting a different outcome. The variables might be different in the sense that you start with one strategy, it works, till it doesn't work. So you think, shit, it's not me. It must be the strategy. So you change, and then you go around in circles because you're doing the same thing. But really, the problem is not the strategy at all. Now, I've done GoldenEye, and it's all I do. For certainly the last decade, I've never really changed it. Why? Because it's level to level from key historical levels, and it works on ratios and numbers, and I know it works. But what I also know is it isn't foolproof. Nothing is. And I get messages all the time looking for these wonderful assistants. And I've got a very in-depth email to answer later today about somebody who just stares at the charts for 2 hours every day, trying to see the patterns. Well, unfortunately, that's not going to help. If anything, it's destructive. So what you need to do is figure out what works for you and then stick with it with the understanding that it ain't going to work all the time. Now, once you have that in place, you need to understand what that strategy's potential win rate is. Now, are you winning 7 in 10? Are you winning 3 in 10? Doesn't matter as long as you know what it is. Then you have to offset it against, well, I'm willing to spend X amount of money for the trade and win X amount of money. Then on historical data, so 7 trades out of 10, those winnings must wipe out the losers. Because if they don't, you're screwed. All right. And that's all about win-loss ratios. I don't go for risk-reward. I think it's fucking stupid. Right. You go on historical win-loss ratios. All right. A stock has one job, protect the account, period. Then the profit is what you get on the other side, return on investment. So you need to put those elements into place. Once you've got all of that, the next part of the question was, how do you recover from? Well, you recover from it by having confidence in what you're doing in the first place. That's why I was starting the monologue with, your win-loss ratios, etc. You need those in place. If you haven't got them in place and you're jumping from one thing to the next and you're over trading, and I know this goes on, you think, right, I've cracked it. I can just go at the chart, go at the chart, go at the chart, go at the chart, go at the chart. Well, I've got news for you. You can't. You get 1, 2, 3 opportunities at best in a day per asset. But if you're jumping from asset to asset, again, you're screwed because your focus is split. So if you ever watch me trade, I'll zone into a asset. I might look at bulls, but I'll only zone into one. And that's me for the day. And if I trade twice on it, I quit. Why? Because I know I'm tempting fate. Win-loss ratios. These are what make it. Now, if you have been battered and you don't know where to turn, the answer is very simple. You start asking binary questions. Am I happy with the system I'm using? It's either going to be yes or it's no. If it's yes, fine. Take a couple of days off, just clear your head down, and then come back. But position right down, really low. Even if it's only 10p, doesn't matter. To build your confidence up a little bit. Because now you're not looking at money, you're looking at process. Then once you've got that process in your head, you can then start increasing. But have your rules set around how big a position size I have, how many times I can go to market in a day, all these different things, and it helps. Now, for me, when I've had a big loss, I have a rule set that is this. I will sacrifice trades and I'll keep going. I don't care about that because sacrificing is part and parcel of the game. If I lose, in other words, all 5 of my madness positions are hit and then it runs into stop and I haven't planned on it, then I'm out sync with market. And then therefore, I have to stop for the day. Reset. Okay? So take a couple of days off. That's why I don't trade Fridays, guys. I take Friday off to reset because it's a stupid day to trade and I've got little time for people who do try and trade all day on a Friday because I know they're fucking idiots and they will never make it in this industry. So there's no point discussing it with them. And how do I know that? 20 years have told me that. Talking to countless professional traders have told you that. And we all sing on the same hymn sheet. But a retail trader will try. And you've got to bash that out with you. So that's another thing. Take Fridays off. But as soon as it goes past 10 o'clock, if you're not in the market, that day's over. And if you're in the market, you want to be out by 1 o'clock. Because if you're stuck in that trade, you're screwed, right? So Friday is a good day to reset. All right. So what else can you do? So take some time off, day or two. You can reduce your position size and go back to one asset. You pick which asset you choose, whether it's euro, dollar, gold, DAX, doesn't matter. And you stick with that for 1 week, at least a week. You're not looking at anything else. You're looking at one asset for the week. And you actually limit the amount of times that you trade up. What this does is starts building your confidence because you will be watching the chart grow. It's where the 30-day challenge comes from. And people must do that because it is crucial in trading. I know people find it very difficult, but that's the point. Teaches discipline, teaches you to look at the charts objectively, and you also see the charts grow on a daily basis. Now, you can do a micro version of that across a week with one asset. And then once you've got through that, you slowly move up and write down on a piece of paper, process over profit. The simple slogan, process over profit. It's the same as what I did years ago, except I wrote less is more. Well, process over profit means stop chasing the pound note. That'll just look after itself. It'll come. But if you follow a process, that should never change. This is what I do. Bang, bang, bang. And the end result is just based on what you put into your market. Well, part of that process is understanding like £1,000, what the modules are all about. And from there, that's it. And it's the only way to do it. But if you're hammer and tongue at the market, looking for magic pills, looking for easy rides, this job will chew you up every time. You'll have a good run because you might hit a mini bull market or bear market that just doesn't seem to stop. But when it turns, they'll take everything away from. And then as a final point of view, never, ever give more than half of your profit away. So if you earn 100 quid in a day and it drops down to 45, you stop. That's it. All right. Best of luck. Catch you soon.